Good afternoon, everybody, on this revised day of Tuesday for the live Business Horizon session, which is part of the Space Accelerator Programme on behalf of the UK Space Agency. My name is Jeremy Ambrose. I am from Entrepreneurial Spark, and we're also in partnership with the University of Strathclyde. Thank you so much for joining us. We are oversubscribed for this live event, so it must mean a lot to you out there that this is the key topic of the funding landscape. We've got some really interesting panelists coming up a bit later on. We've got the video to show you on the funding landscape, and we really want you to just get involved as much as you can. So there's a few ways you can do that. Most importantly, and firstly, you should be on a web page, and you can get involved by just scanning that QR code on the left-hand side of your on the left-hand side of your screen right now. It should be an event code for Slido. You can go to slido.com and put that event code in, B940, and that'll allow you to interact with the panelists and also ask questions. Really important, ask the questions that are burning. Otherwise, to make sure that you're part of the full experience is to change the settings on your screen. There should be a cog somewhere, and just change that to the HD settings so you can see everything and hear everybody clearly. You are able to watch this again, so if you don't get what you want to get out of it in the first time, you can always watch it again and pick out those key points on this same link. You'll be able to watch that one. Whatever you do get out of this, share it. Share it on social media. Tell people what you're getting out of these. We are a very interactive bunch. So, we try to retweet, we try to requote, we try to, really share your thoughts and feelings on on what you've just watched and what you've just been part of. If we are unable to get to the questions that you put onto that Slido, then we will come out to everybody on the blog on our website, which is part of the website that you're on right now. We will come back out to everybody as part of that blog to answer those questions that have been missed, but we do endeavour to get to as many of those as we can. Now, another thing that's been really prevalent is the fact that we're having so many people from different industries joining us. So no, this isn't just for space. This is run by the UK Space Agency, but it's going to take so many different industries, so many different thinkers, so many different personalities to grow the space industry. So everybody's more than welcome. And please, make this relevant for you, whatever sector or industry you are in. So the topic today is the funding landscape. Now, this is, I guess, that pre-decision. We're exploring the ways we can grow and accelerate our business, and what are the options that are open to us pre kind of investor readiness or getting ready to receive funds. We need to know, well, what avenue do we need to take, and that's what we're going to explore today. So there's a few key outcomes that we want to kind of get out of today. Firstly, understand the different avenues of funding for your business and how they apply. Really key to this is you being able to take action off the back of everything that you've heard. So get yourself a question set. What are the right questions you need to be asking yourself to find the right source of funding? And a really key question is actually, do I need funding to get me to where I need to be? But also, another great outcome is to get really clear on the timings for funding and be able to create a roadmap towards funding, who you need to speak to, what you need to get done to really explore the right avenue for you and the business. So some clear outcomes there. Let's get on to achieving those. A bit later on, we will bring in the live panelists. So we have Dr. Caroline Arbuckle from the business development. She's a business development officer at the West of Scotland KTP Centre. We also have Rob Desborough, who is a partner at Seraphim Space Fund, but also the CEO of the Seraphim Space Camp, the boot camps. And then just after that, we'll bring Wen Miao Yu in, who is the co-founder and director of business development at Quantum Dice. Now, she is on our Leo program, which is the brother or the sister to a Business Horizon session on the Accelerator program. We're supporting her and her team to grow and scale. So I guess without further ado, I'd love to show you the video now. Make sure you're taking action while we're watching this. So what are the key points? What are the key questions that you're asking yourself? Get them written down, but also make sure you're interacting with the Slido, because there's going to be the expert panel that you'll be able to ask those questions of that are cropping up throughout the video. So sit back, don't relax, and start writing some notes.
It's fair to say that most entrepreneurs think they need more money. If only I had X pounds, then I could really take my business to the next level. Which is why the funding landscape has become such a hot topic in entrepreneurial circles over the last few years. But to call it a landscape is misleading. It moves much more quickly and fluidly than that. So the funding ocean is more like the right kind of term. To try and capture all of it would take weeks in terms of specific opportunities, and frankly by the time we made that video it will be out of date. So our aim today is not to educate you about all the individual funding pots, but to inspire you with the art of the possible when it comes to funding, and to share some real-world experiences to help set you off on the right path and give you a greater chance of success when you do find a potential funding partner. So let's examine the funding landscape in the space sector and meet the entrepreneurs who are going to be sharing their experiences.
So on types of funding, broadly fits into 4 areas. So there's equity funding, there's loans, grants, and then there's a number of non-financial incentives. So growth in equity funding worldwide has been large. It's coming from venture capital funds, business angels, high net worth individuals. Projects that traditionally I think have been viewed as high risk with long times to make returns compared to other tech projects have now been sort of placed, I think, more into context, and the reluctance to invest is diminishing, and investing in space is now becoming more business as usual. Business loans provide the second mechanism, not only from banks, but government is now increasingly offering innovation continuity loans through Innovate UK. Thirdly, we look at grants to provide support for R&D and innovation. The objective here is to increase the amount of science and R&D done in the UK. But the UK Space Agency works very closely with the European Space Agency to offer R&D grants in satellite communications, Earth observation and applications. It's important to note in these cases that there's going to be a need for private investment to match government funding, agency funding. So there's going to be a need to be able to demonstrate that this could be found within the company. But that's actually quite, in a sense, quite a positive link between corporate and private investment. Last point I'd like to make is non-financial incentives will secure private investment as well. So looking at new contracts, if companies can secure contracts from the public sector or contracts from commercial companies, investors will look positively at this, and it can help sort of crowd in that sort of private investment.
Yes, so the funding that we've accessed so far has been a mix of personal money from my co-founder and I, grants, and equity investment. And all of that was completely new to me. I was trying to create, I wouldn't have even called it a prototype, it was a demonstrator that I took out to show our target customers, who said, good, go and build us a working version by this date. So, and I just said yes, and then came back to Scotland thinking, well, how am I going to get the funding to do that?
So the different types of funding that we've accessed are really vary depending on the business in itself, actually. So there's 3 businesses, and we've covered crowdfunding on 2 occasions. Angel investment, so we've brought on high net worth individuals who invested directly into the business and also part of the crowdfunding campaign, and institutional investment for our larger business. And each of those businesses are actually at different stages in their journey. The crowdfunding is very much startup, early doors in the business journey. and angel investment was sort of mid-growth stage, and the institutional investment was for a business that has over £68 million worth of orders. So it really depended on the business and the route that we took.
So that's a high-level overview of what the funding landscape looks like in the space sector, and some stories from real entrepreneurs about how their funding journey has progressed. So now we're going to turn to look at why you might raise a particular type of funding. Because it's not just about the money. In fact, the amount of funding that you raise ranks fairly low on the indicators of business success. Other things like timing, execution, team, and business model all come higher up. So if you're not clear on those areas, then no amount of funding will make a difference. So when we're looking at the funding landscape, it's important to look at what opportunities outside of the cash a funding route will open up for you. So we're going to go back to our entrepreneurs now to hear more about that, but first we're going to Andrew at the West of Scotland Knowledge Transfer Partnership Centre. He's talking specifically about KTPs, but his insights can be applied to any type of grant funding.
With KTP, you would get a half a day per week academic supervision of your project. So that's all costed in with the project. So you get quite a lot of support from the academic team there. If you're looking to, I suppose, market, a new product, there's the opportunity for the academic team to write journal papers, conference papers, which are great for, showing the theory behind whatever it is you've created, which can obviously be really beneficial if you're trying to sell it. In terms of post-KTP results that we usually see more jobs created within organisations, so we see the company growing. There's usually downstream IP, patents, so again that's adding value to the company, and ultimately we see increased turnover within companies, so we look at the business plan of the company and how KTP can best support that, so we want to see increased turnover within the company, so there's a whole host of benefits for companies working with KTP.
Making the decision between bootstrapping and raising equity investment, it was pretty much determined, I think, mainly by what our target customers were asking of us in terms of what they wanted to see in how much time. And that customer was NASA, and the timeline was, if you can get this to us by this point, we will begin the process of putting it on the space station for you. So we said, yes, we will have to compromise on lots and lots of things, but we will not let you down for that date. So it just became a review of what are the different ways that we can get this built in the time that we've got.
So our decision to raise via the crowd came from a point where we had actually we'd proven the concept and started to have some traction in the business. It was growing, it was scaling, and we almost needed to fast forward that growth. And by raising six-figure investment, it would enable us to incorporate development and various other elements that actually would bring our goals forward by probably 2 or 3 years. And the option really was to either sit around and carry on doing what we were doing and not bring external parties on an investment on, but it just would have been a tough slog for us, I think, and that investment enabled us to really accelerate and jump forward by, like I say, 2 or 3 years.
So what's apparent is that, as well as the opportunities that funding can bring, it's important to think about the right funding for the right stage of your business. If all you have is an idea, then you're unlikely to be able to convince investors or banks to part with cash. Funding a startup that early starts with the 3 Fs: founders, friends, and family. Don't discount the idea, though, of accessing grants to fund early research or market development. As you build momentum and traction, more options open to you, like investors and banks. But you could hear from all of our founders that they had great stories to tell with timing, with business model, with team and execution before they accessed funding, and the funding was the final piece of the puzzle for them. So it's important to think about 3 things. Firstly, why you want to raise funding. Secondly, where that funding will get you to. And thirdly, what funding is appropriate for your stage of business. But before you dive into the fray, here are some other things to think about.
different funders have always got their own sort of their own quirks and what they would be looking for as an organisation. Some grant funders are happy that if you're a newer company as a startup, that they won't be looking for a sort of a cash investment along with the project. So when you're working with universities, there are funds out there, likes of Impact Accelerator account type funding, industrial vouchers, those sorts of things if you're a smaller company looking to get involved. And then on the other end of the scale, there's huge £100,000 plus pots of money that are available that you would need to show that you've got sort of more capital behind you, and that you would be able to sort of match fund along with the grant rates that are on offer.
Having grant funding as part of your business model has a lot of pros and cons, especially in the beginning. Some of that funding can be it's like being on life support. It's like oxygen. You can do a huge amount with it, but the vagaries of the timing, that some of that's match funded, so you need cash to get that grant in the first place, or will be paid in retrospect, so you still need cash to pay for the work and then get it back in retrospect. All of that was new to me.
The picture facing you is complex. There's not really a one-stop shop in obtaining finance, and often you're going to be looking at a mix of supports from different sources. Perhaps a mix of venture capital, loans, grants. You're going to have to put the hours in and do your homework and create the business case, and then you need to talk to people who can help. I've mentioned already the business incubation centres, the Satellite Finance Network and the Satellite Innovation Catapult, but actually they are genuinely set up to help you sell your case persuasively. You need to appreciate that venture capital companies and business angels invest in leadership teams as much as really good ideas. So what they want is to be able to take confidence that you're managing the company and you're managing their money effectively. Venture capital companies such as Seraphim run boot camps to help companies become investable opportunities. The Satellite Finance Network also runs mentoring schemes for new companies. They both have good track records, and I think the advice is to go and talk to these people and actually pick up on their expertise. And I think a final point is keep an eye on the products offered by the likes of the UK Space Agency, Innovate and the British Business Bank by signing up to their notification schemes, keeping on the website to see what's coming up. For example, the British Business Bank is planning to launch its Future Fund Breakthrough scheme for established UK tech companies, and that's got the specific intent of crowding in private investment to support the growth of organisations. So, worthwhile just keeping an eye across the piece and then really developing the network and talking to people as you want to pick up on the expertise.
Talking about the areas that the hurdles that we faced and the areas that we sort of came across, really, I think the biggest thing for us was in the early stages of our very first business. It was actually just before we crowdfunded, we had angel investment, and it wasn't a huge sum of money. And we, despite advice from other people saying, are you sure this deal's for you? There's a lot of equity you're giving away here for such a small amount. And I think we were so early on in our journey that we were like, well, it's this chunk of cash in our bank. We're so excited to have it. There's so much we can do with this money. Oh, and the person that's investing is a very, very successful entrepreneur, sold a business for in excess of £200 million. We'll have them associated with the business. This is unbelievable. And we didn't look at, yes, that person was fantastic as an entrepreneur, was very successful, but in a completely different niche, a completely different sector. And, could advise us really in entrepreneurial aspects and various other things, but just really didn't understand our industry of online training. And it was a point really that I sat there and thought, if I was to do this again, yes, it's great to get investment on board, and yes, it's great to get successful entrepreneurs on board, but just make sure that they can add value outside of cash. If they come on board, what can they bring to the business that really is going to help that business grow, scale, and move to the next level? And, there was an element of that, but it was a very small element.
So there's a host of useful insights there from our founders and experts. Before we go, I just want to talk briefly about bootstrapping. If you're not familiar with the term, it means funding your business through customers and sales rather than raising external finance. And it's a really viable option for a lot of businesses. So before you spend loads of time investigating the funding landscape, trying to find that exact right opportunity for you, I challenge you to think about what 6 months of good hard sales could do for you. Not only will it generate cash, or at least letters of intent or pre-orders, but you'll learn a huge amount about your customers through the process, and that can add credibility for when you do decide to raise funding further down the line. So to summarize everything that we've heard today, here's 3 clear messages. The first is that raising funding takes time. It takes commitment, work, and resilience on your part. It won't happen overnight, and there is no magic bullet. The second message is that just trying to raise funding from anywhere you can get it is not the right way to approach the funding landscape. Timing, ease of access, and what other opportunities that funding brings you all come into play. And the third message is that if you can see clearly where you need to get to, if you can prove that with evidence that doesn't just exist in your own head, and if you can convince people that you are the person to deliver, there will always be a way to fund the growth of your business. So get Googling, get in touch with your local growth advisors or sector growth advisors. There'll be people there that can signpost you to the different opportunities that are right for your business. Now, it's over to you.
Super, right. So you just watched the video on the funding landscape. So many things in there to get hold of. I hope I've written a good couple of pages of notes there. Get involved in the Slido. It's actually really great to see John Loveday is on the Slido, who is part of that video, and he's got some great experience in different avenues and different levels of support that he's accessed. So he's answering a few questions. So thank you very much, John, for that. And also the questions are coming in, so we'll try to get to as many as we can. So let's bring in our expert panel. Now, firstly, I'm going to bring in Carolyn. Now, I'm not going to introduce her. She can tell you exactly what she does and how she does it. So, Carolyn.
Hi, Jeremy. Hi. I am a business development officer for the West of Scotland KTP Centre. So the way that KTP works, it's a national programme, so it's eligible for any business across the UK, as long as they've got at least 5 people on their payroll. And my role is to help match a company with academic expertise in a university so that they can work together on a research problem or a challenge that the company's facing in order to increase the company's competitiveness and help them to grow.
Yeah.
So part of that is I will help you find an academic team that've got the expertise that you need, and I will also help scope out your project for you and make sure that it fits the criteria for the funders and help you write the application form. So I take up some of the admin burden for you as well and make it a bit easier for you to get the funding in.
Wow. So I didn't actually understand like all the facets to your role, but yeah, wow, what an amazing place to get support and actually to get you to a point where you can understand where you need to be with the funding landscape. So yeah, thank you, Carolyn. I'll also bring in Rob. Now, Rob is a partner at the Seraphim Space Fund, but that's all I'm going to say. Rob, if you wouldn't mind just introducing yourself and telling us exactly what you do.
Sure, thank you. So, as Jeremy said, I'm one of the partners at Seraphim Space Fund, and I'm also CEO of Seraphim Space Camp. Seraphim is the world's leading investment group focused on the opportunity at space tech. We've got a £67 million fund that is typically focused on Series A stage transactions, and Seraphim Space Camp is now one of the world's leading space-focused accelerator programs, typically for seed stage companies, although we also work with pre-seed stage companies as well. As a fund, we've now made 19 investments. We have 2 unicorn companies that have recently been announced in Spire and AST. Across the fund and accelerator, we've supported nearly 60 companies, so it's the largest portfolio pretty much within the space environment. We're active investors in the US, Europe, and the UK as well. In terms of our accelerator, it's a VC-led accelerator. So we're all about getting companies ready now with a view to closing out and positioning for a Series A transaction within typically 12 to 18 months following transition through the accelerator, and also introducing those companies to corporates who can validate the technology, validate the opportunity, and act as a due diligence reference point for investors coming into those companies as well.
Perfect. Thank you, Rob. Now, I'm just going to pull you up on some of the stuff that you just said there, because there's so many technical founders out there, research-led, scientific, all of those kind of backgrounds. So they might not know what a unicorn is, might not know what a VC is, and just give us a quick idea of where seed stage is, and then a series round. Give us an understanding of that.
Great. So a unicorn, I'm very pleased to answer that question. So unicorn is when you back a company that is now worth over $1 billion. Typically, that's by either new funding round that has valued the company at that level, or it's by what we term as an IPO. So they've listed on a market at over $1 billion in valuation. It's great for the space scene, but we're now starting to see real returns coming through to investors, which is hopefully proving this asset class. In terms of stages, then companies tend to progress from spinning out or potentially university, or the company is founded. They're typically then at a pre-seed stage. Then they're looking to have some validation of the technology design. They're then moving through to a seed round where they're pulling together a team of people to help execute against the opportunity. Typically, those rounds are between 1 and 2 million in a global context. And then Series A is where you can start demonstrating visibility of a real commercial opportunity. And within the space environment, typically those rounds are between about 5 and 15 million pounds in total. And then you have various other funding rounds all the way through to typically Series A, and then maybe an IPO or an exit. So hopefully, Jeremy, that covered a few of your points. I think it's interesting in terms of the entrepreneurs we're working with across the portfolio, 70% of them are PhD engineers, astrophysicists, quantum scientists. So it's often we have to spend a huge amount of time working with people with those kind of backgrounds and really getting them familiar with the venture landscape. I think final point there was to touch on what is venture capital. Well, venture capital is a sort of equity funding that is looking for very high growth, high risk companies where there's a potential for very significant reward if we hit the right outcomes. So typically at a seed stage, we're looking for a 20 times return on capital to balance the risk of the overall investment. And we'll look to take an equity stake of between kind of 15 and 25, 30% in the company.
Yeah. Absolute minefield of terminology and technical stuff. But I want to just come to you, Carolyn. It seems like no. I'll ask you the question directly. At what point in all of that do I come to you?
Well, you come to me when you are probably, I'm not sure if everyone's aware of TRLs or technology readiness levels. KTP funding sort of suits TRL 5 to 8. So it's not the sort of early stage proof of concept, feasibility study type work. It's really more towards the commercialization end of what it is that you're wanting to do. And one of the things that the UK government look for when they're first of all assessing your application and then also following the project as it progresses is to see how you're managing to get to your route to commercialization and whether it's happening successfully for you. So that's probably where we would slot in.
Okay. And do you would you then kind of signpost to other areas, or is it simply to get people to the level that they need to be to then go and raise some other fundings?
No, we definitely signpost people, and part of what we do is we signpost in both directions. So we can have people coming to us who really need to be doing a little bit more of the earlier work, so we can help point them in the right direction for that. And yes, we work with a lot of people. A lot of the companies that we work with are actually, they're applying for KTP funding at the same time as sort of approaching angel investors and SIB, BIB. So there's very often lots of different kind of pots within the funding landscape all being kind of approached at once.
Okay. So I want to kind of bring in some of the questions that are on the Slido. And one of the first questions is that many of the accelerator programs out there don't have associated business funds, or some do. Why do you think some do and some don't? I mean, I can probably kick that off, but let's hear from you guys. I mean, yeah, there's probably different directions. There's different expertise levels. I'm sure that everybody, just like you, Carolyn, everybody will be signposting to different avenues of support, but it might not necessarily be their niche. But are there any experience that you have of why they might? Why else? Not really.
Not really. No. I guess it just depends on the organisation and why they've been set up and what their sort of directives are and what their main purpose is. Obviously, the ones that are going to provide more direct funding for businesses will have a sort of directorate to boost the economy in that area through that, and the ones that maybe focus on other avenues like the academic side of things, they've got different sort of outcomes. But other than that, from my point of view, I don't have any other insight.
I can't agree.
I think from our perspective, it often comes down to who's supporting the accelerator and what the objectives are. So I think one of the questions mentioned the KIC Climate Accelerator, and that's supported by the European Union. We also have within our broad environment accelerators supported by Techstars or by Boeing and others. So it's very big commercial supporters, which then help support providing equity directly or equity investment directly to the cohort of companies. From our perspective, then a lot of the companies we're working with have probably already raised between 300,000 and 3 million. So they're at a slightly different stage, and 25 or 50,000 wouldn't necessarily move the dial for what those companies are looking to do. We have supported, the companies going through have now closed, I think, $55 million in equity investment funding, and we've invested into 6 of the companies. So typically the lead one coming out of each cohort that we've invested into. And we've invested typically between about 100,000 up to about 400,000 as part of overall the 1 to 2 million investment round. So there is the potential to close out funding, but not just by joining the accelerator in the first place.
Yeah. And I guess that's a really good point, isn't it? Because for those entrepreneurs and those people who are kind of wading through the landscape right now and understanding what's out there, there's a certain amount of research that you need to do to figure out what's right for you. And whether it is an accelerator that is attached to a fund, great. If it's attached to a corporate partnership, which could actually help you get further on within your TRLs, or it's understanding what's right for you. So some don't, some do. Make sure you know what's right for you at what level, I guess. Absolutely. Once we're there and we're thinking like, I need a lot of funding here, but I live in Scotland. Because there's a question on here that says most of the venture capital in the UK goes to London, Harwell. Now there is a cluster down there. How do you access VC if you're based outside of these hubs?
Well, I think from my perspective, I would debate the premise of the question in the first place. I think that is a fair assumption to make if you're doing a digital startup. I think the largest volume of capital is going into London startups. But certainly from our perspective, then we've invested across the UK. So our last investment we closed out at a seed stage was into a Sheffield company. but also, our Spire, which is one of our unicorns, is now based in Glasgow. It's their biggest R&D centre, and they've raised 200 million globally. So we invest everywhere for the right opportunities. So, and I certainly don't think, I think we've hardly had any investment going into London startups. We don't tend to see the deep tech companies based in London.
I think also, you look at recent times. You can tick that one off your bingo card. Recent times and COVID, then suddenly access to all types of funding, all types of people to speak to has become a lot easier. So I think, as we move forward, there's going to be a lot easier access for people in more remote areas to access any kind of funding. And now there's a few nods there, Carolyn. Have you got something to add to that?
Oh, I was just going to say that not so much, everything I'm approaching is from the grant funding point of view as opposed to investment funding, but certainly through the government there is the place agenda, and that each of the devolved governments have the place agenda as well, which is about focusing on boosting the economy and boosting the sort of manufacturing capability and the ability of businesses within specific areas in the UK. So it's about trying to draw the focus away from the sort of the London hub.
Okay, so looking at kind of grants and other avenues, there's a good question here that's come in, which is, much of the early stage funding focuses around universities. How do you access funding if you need to fund your own activities and cannot afford academics? That sounds like it's for you, Carolyn.
Yeah, well, first of all, I would ask, I think it was Alan that asked that, what kind of money are you talking about affording? Because you can work with academics for free. One of the really popular ways that the academics work, and it's termed as a sort of quick and dirty way of doing a sort of feasibility study, is something called an innovation voucher, where you're given £5,000 to work with an academic to test out a theory. And then if that, if it proves, your hypothesis and, leads on to something else, then you've maybe got the sort of the data to put forward for further funding. So it doesn't always have to be expensive to work with academics. A lot of people work through the universities with students as well and get student placements, or summer students, for example, coming to work for the company, which doesn't necessarily cost the company.
Yeah. No, absolutely. I guess it's also kind of understanding where you are in your journey, what you want to prove next, to then move yourself up in the kind of credible, backable, and investable stages. And if it's, as you talked about there, that kind of 5K pot to get you to the next level, to then go for something bigger, then actually the level of investment or the level of funding required is a lot less and probably more accessible. It comes in the form of a voucher. Fantastic. Rob, would you have any advice on that? Where would you turn?
Well, I think certainly within specifically the space environment, we've worked very closely with the Sprint program. The Sprint program is a consortium of 5 universities who've come together. And why it's a benefit to our companies is that you can get, I believe it's an 80% supported program, whereby you can utilize university academic resources against a defined program, and then you're only contributing 20% of the cost towards that. So I think that's certainly been of benefit to companies we're working with and investing into, and it's focused on the space sector, and I believe that's a program that's now expanding as well. I think within a space domain, grant funding is really important. It's a real mobilizer to bringing on board private investment from venture capitalists. We're very much looking at it now to leverage our investments. Typically speaking, for a space tech startup, the early rounds are twice as big and they're much earlier than you would get for a normal venture-backed startup. So bringing in the additional grant funding is really critical. And we've certainly made decisions on the basis of grant funding coming into companies, because from our perspective, that helps our pound go further and hit milestones earlier than they might have done otherwise. So it's I would strongly encourage it. I think the scene has changed. They're less They're more focused than they would have been in the past, and less difficult to manage. So it's something we look on very favourably.
Yeah. And again, I can see you kind of nodding away there, Karen. I guess there's a combined approach. There's the grant funding, which kind of gives you a bit more credibility and space. But with that grant funding, you can, hone the team down, get the knowledge that you need to move to the next level. And they could probably do that through the KTP, right?
Yeah, definitely. One of the benefits of KTP is that it very often leads on to future investment or, future sort of big grants. The cost of a KTP, it works out at being about 95k a year for a project. And if it's an SME that's involved, then they get 2/3 of that paid by grant and they pay the other third. If it's a large organisation, it's a 50-50 split. But it ends up that a lot of the projects, so in terms of sort of research council funding, it's a small amount really, especially when you've got multi-million-pound grants. But it leads on to those types of grants, much larger collaborative R&D grants and research council funding. So yeah, it can be a good sort of stepping stone from one to the next.
Definitely, that's what it's about, isn't it? You might not be ready to go for that big Series A round. Well, go from startup to Series A, is nigh on impossible. But being able to kind of prove yourself and building up the credibility and investability that your company has, and you have, there are lots of different stepping stones that you can take, and certainly been talking about them on this call.
And one of the most important things, Jeremy, is making the first point of contact. Because you can't start making the stepping stones until you start to speak to somebody. And even if it's not the correct person that you're speaking to, they won't. Well, for example, the University of Strathclyde, if you speak to them, they're not going to turn you away and say, no, that's not what we do. They will point you in the direction of the person that would. So it's all about signposting. So the important bit is making the first step to starting to speak to somebody about how you can work with them or what you could do.
Definitely, just having that critical voice around you as well, and the signposter is very important. No, thank you. I do just want to bring in our entrepreneur, and while we're just bringing Wenmiao in, I want to kind of target that. There's a terminology question on the slider, and that is, what's an accelerator? Yeah, really good point. So an accelerator, for my understanding and our terminology, an accelerator is something that takes you from A to B as a business operator or owner quicker than you would with any other support. And it could be in the form of a program where there's knowledge exchange. There could be mentors, advisors, and people all kind of in one place helping you to get from A to B quicker than you might necessarily get there any other time. And there are so many programs out there that are accelerators, versus an incubator, which you've probably heard as well. An incubator is, I guess, more of a co-working space that'll help you, nurture you, give you a nice space to grow, but not necessarily have those injections of pace and challenge and support that you might get from an accelerator point of view. So that's, I guess, that would clear up that kind of terminology there. Let's bring Wenmiao in, because she's got an interesting story. Wenmiao, thank you for joining us. Do you want to just give us a quick intro, who you are and what you're part of right now?
Of course. So right now I am part of the Leo Accelerator, and I am a co-founder of Quantum Dice, and we are a spin-out from the University of Oxford, developing the world's first compact but also very high rate quantum random number generator, so specifically for applications into cryptography and also into quantum secure communications. So for example, our quantum random number generator could be used as the key generator in quantum key distribution. And my role at Quantum Dice is as Director of Business Development, and also I'm currently looking at how we're expanding into supporting and also enabling some of the key technologies that are being developed in the UK space sector.
Yeah, wow. Okay. So from the video that you just watched, is there anything you're going to do differently? Anything that has challenged you and thought, oh, maybe we should have done that before? Yeah, what are your thoughts on that?
I think there was a lot to take in the video, and also, of course, in the discussion just now. And I really agree with some of the points raised, but specifically talking about being able to leverage the different types of funding and being able to pull them into your business at the right time in order to support specific goals that you have. So I think, for example, at Quantum Dice, when we started, we first received a convertible note as a prize, and then received some equity-free grant funding from the EPSRC in order to fund biz dev costs, but also co-founder salaries, and then applied for and also received an Innovate UK grant before we were at a stage where we were ready to start raising our seed round in order to ask for equity investment.
So what made you go for those things before you went for that? Was it a credibility thing? Was it did people say no to you, or how did you come to the decision that that was the way you wanted to go?
Well, see, because we are a very early stage and also hardware focused business, we always knew that in order to even start our business, we're going to need a lot of capital injection right from the start, and this is in order to hire engineers and also in order to do the technical R&D that is needed to bring our product from its current prototype stage to a minimum viable product. However, before then, although we had a patent, we still had to do a lot in terms of market development and also identifying the markets where this very innovative and also new piece of technology can be applied to, and also more importantly, find and also create relationships with potential customers in order to show that there is a market need and to show that there's a market pool for the QRNG that we're developing.
Yeah, so I guess it's all about credibility in the space before you go for that larger funding round, to say, listen, this is what we do, this is how we do it, this is who it's for, and we are credible to own this space. And that's why you went for those kind of, I guess, what we were talking about earlier, those kind of milestones, those stepping stones towards that larger thing. Yeah. Okay. Your start was a convertible loan note. How did you source that? Where did you go to get to get that?
Well, so we
actually, when we are sorry, what is it? What is it for those people who don't know what it is?
Of course. So a convertible loan note is a form of equity investment, I guess, which converts after a certain amount of time to a certain number of shares in your business. And often in the kind of pre-seed / seed stage companies, it's a mechanism that's used by angel investors, but also some VCs, in order to provide a little bit of capital to a company that they see potential in order for this company to reach a smaller set of milestones before they can then leap onto the next stage and receive equity investment directly from the institutions. And we were able to receive that because that was a prize from the Student Entrepreneurials program that my university ran. And also it was through that program that Quantum Dice was formed. And it was actually that initial convertible note that allowed us to start the design and also fabrication of our first batch of prototype photonic chip QNGs. Yeah.
Okay. And I mean, there's probably a more dirty way of saying, but there's sweat equity as well, which, converting work into equity or shares is another way of looking at it, convertible loan notes and also all kinds of things. How important has it been for you to develop relationships with all of those people? Because, you just kind of reeled off a few different, the university, you talked about different funds, you talked about this. How important has it been to you to kind of leverage the relationships and grow those as you've grown as a business?
Oh, Jeremy, I think it's absolutely so important, especially for early stage founders, to find networks and also to find support groups of both mentors but also other entrepreneurs, so that they're not alone on that journey of kind of creating a venture. And for us, it all started through the Oxford University Innovation Department, who organised the Student Entrepreneurials program. And it was through that program that we actually met some of the centre directors at the Quantum Technology Enterprise Centre in Bristol. And they are a quantum technology incubator and one of the only ones in the UK to support early stage hardware quantum tech startups. And then through QTech, we were able to gain a broader understanding of the whole quantum technology landscape in the UK, but also to learn about different types of funding and also to learn how to develop our pitch, which was a huge support, especially since especially since we started our seed raise during our time at QTech as well.
Yeah, developing a pitch. Now we will come on to that with the Business Horizons sessions, but what have you got out of being able to pitch better? Is it linked to those softer skills, relationship building, or has it actually been able to hone your proposition, your market fit? Where does that sit?
We see, I think we found that it became easier to pitch once we had a very clear idea of what our product will be or is, and also what problem it solves for our customer. And of course, that journey, especially if you are creating a company and starting from a piece of technology rather than creating a company based on a current gap in the market, it's two very different approaches to creating a market. And for us, it's been vital to have had the support of the AUI and also the QTech networks in order to give us the time that we needed to do the research and to do the market development research, to do the customer research needed in order to clearly, in our own minds, be able to have a very compelling story that pulled together all the different bits of information that we have been gathering, and to be able to communicate that very clearly to audiences and also to investors who might not be as involved in the technology as, say, the technical people within the company is.
Yeah. So very important to be able to pitch as well, and hone down that proposition to say why you are fit to actually own the space and be great at what you do. Yeah, I think that's really important, and kind of bringing that back to the funding landscape, knowing where to turn at what stage, all comes down to understanding your product market fit, understanding what you do for who, and therefore what's the next level to prove that to the next level of funding, to the next, and whoever needs to know that. Yeah, okay. I do want to bring Rob and Carolyn back in because I wanted to just understand that kind of roadmap a little bit more and where you would start. So we've talked about the roadmap. Where you've clearly articulated where you went and how you did it. Rob, Carolyn, somebody starting out, the roadmap, where would you start to develop your roadmap in the funding landscape? What do you need?
I think from my perspective, it's really important to take a step back and understand what kind of business you're actually building, and then what type of entrepreneur you are. So venture capital is probably the most high-risk investment asset class. And given that, we're looking for a commensurate return. So you need to be building a business that can reach a value of probably in excess of $100 million, is addressing a market in the hundreds of millions, is highly scalable, has some very rich intellectual property, and you've got a team that can execute against that opportunity. So if you're not building that kind of business, then you shouldn't take on board that kind of funding because there's a misalignment. I mean, I think the other thing is, as an entrepreneur, are you someone who's prepared to give up parts of your company? Because the day you take on board external investment, it's no longer your company anymore. You've got external shareholders. So you need to really think about those, two things. Is it the right kind of company? Are you going to exit in 5 to 7 years' time? We're not in the business of backing someone who's going to build a company over 20 years. We want to know there's a trade sale there in the long run. So do take that step back, have a think about what kind of business you are, and also what kind of stage you're at, which lots of people have touched on here. There's no point talking to a Series A investor if you're at pre-seed or seed stage, and you should be talking to angels. The only people in my experience who can break that funding ladder, who can go and raise a 10 million round straight away, have probably successfully delivered for investors 2 or 3 times in the past. And they're more willing because it's de-risked because of the people behind it. Yeah. So maybe my 2 key things you have to think about before then thinking about the kind of stage you're at and who you should be talking to.
Yeah, really important. Those serial offenders, those ones, they're the ones who can go and raise big things before they actually, we need to look at the whole landscape before we can actually know where to turn. I agree. But before I go and speak to Rob, Carolyn, where would you say I should start?
Well, I don't think there's much I can add to what Rob said. It was very, very kind of clear description. And the only thing I would say is that consider the value proposition of what it is that your business is going to deliver for the market, and that might guide, the way that you approach it.
Absolutely, understanding your value proposition is absolutely key, and when we had that was one of the keys to open up the next round for you, was really being able to demonstrate the value proposition. So where do you fit in the market, to who, what do you do for who, and then you can then move to the next level, and understanding that roadmap will then clearly be able to point you in the right direction to where you need to go for funding. Brilliant. Thank you so much, guys. That's been super helpful. Thank you for joining us. I do want to just kind of move straight into what we have coming up next, because we have the peer session on Thursday. Now, it's a little bit different this time, because the peer session is all about the funding landscape. It's Thursday, the 8th of April, 12 till 1:30 p.m. You can sign up for it right there on that QR code. It is also down the bottom of your screen. If you just scroll down, there should be a link there to click on. Please go and register for it, because we also have a guest who's going to be joining us, special guest, to talk you through the funding landscape too. So yeah, please do join us to continue the conversation on the funding landscape on our action learning session, cleverly titled the peer-to-peer session. It's an action learning session on Thursday. Have we achieved the outcomes that we wanted? I want to check in with those. So do you now kind of understand the different avenues of funding for your business, where you might be turning next? What are the right questions you should be asking yourself right now, wherever you are on your journey, to indicate what the right source of funding, if funding is the right for you? But also, have you been able to get clearer on the timings for funding and be able to create that roadmap? Being able to visualize where you want to go when is really important, as we've just heard from the experts and also our entrepreneur. So going away and being able to create that roadmap for yourself is so important. There's a Slido poll just about to turn up on your screen, and this is to give us some feedback. Please, we want to get your feedback. So the Slido poll's coming up just now. If you are on there, please take it. It only takes a couple of minutes, and it just helps us to refine what we do and how we do it as we move through these live sessions. There's also another option for you to give us feedback via that QR code, which takes you to a Survey Monkey. Again, we love feedback. We thrive off it, so please do give us it. And also, if you want to continue any kind of conversation around the space sector, then our Discord channel is there. Again, just down the bottom of your screen, you should be able to see a link to that. But also, if you've got a QR code reader, scan that QR code there, join the conversation, and just keep asking questions. Build up relationships with people, and then they will signpost you to where you need to go next. So keep the conversation going, and join us on our Discord channel. And finally, we return to a Monday next week, Monday the 12th at 1 p.m. And it segues quite nicely from what we've just talked about. Investor readiness. How do you get investor ready? What are the top tips that you need to take to make sure that you are backable, credible, and investable when you figured out out of all of that funding landscape where you want to go next? So please do sign up for that on the link on the screen right now. Or there's a big red button at the bottom of your screen, which should take you straight to the Eventbrite to sign up. We look forward to seeing you. And then it just goes for me to say thank you so much for joining us. There's been hundreds of you on this, so thank you so much for joining us. We really look forward to next week. Take action and make sure you know what to do next. Thanks very much.